Hey folks, welcome back to the channel. This is Jason, and let's talk a little bit today about China's EV market, which is the largest car market in the world at roughly 20 million units per year sold, as well as now the largest EV market in terms of domestic purchases and also in terms of exports. This video is not all about Tesla. I did want to point out that Tesla's EV or China-made EV sales fall by 6% year over year in April. Most of that 6% decline has to do with the European market, and most of that, I think, is driven by politics and negative brand perception in Europe, Australia, New Zealand, and a few other places. In China, however, politics is not as much a concern. The Chinese consumers just don't seem to care about it that much. It's a different story in China. It's all about competition on price, value, technology, and brand choice. And Tesla is in trouble there. I don't believe we're going to see precipitous drop-offs in market share. Their market share is relatively frozen. And I think that little by little, they're going to get eaten away, their market share, that is, by competition. And let's talk about that. So Tesla's China-made EV sales fall by 6% year over year in April. This is not the case for Chinese companies. They are still robustly exporting. Deliveries of China-made Model 3 and Y vehicles, which account for exports to markets including Europe, as well as China sales, totaled 58,459 units last month, down 25.8% from March on data from the China Passenger Car Association. That's all because Tesla's sales plunged in Europe in April as brand perception suffered and people started to turn away from Elon Musk. So let's move on from there and let's talk about what is going on in the Chinese market. Battery electric vehicles represent over a third of the total Chinese car market in March. And let's remember that the rough total annual car market in China is about 20 million units. So March actually signals the end of the low season in the Chinese EV market due to the timing of the Chinese Lunar New Year celebrations. It occurred a little bit earlier this year. So first quarter of 2025 probably looks better than first quarter of other years because of how early Chinese New Year was this year. So ICE sales, internal combustion engine sales, dropped by some 76,000 units year over year in March, and battery electric vehicles were up pretty large. So digging deeper into the numbers, battery electric vehicles were the fastest growing technology, growing by up to 51% to 646,000 units, while plug-in hybrid electric vehicles grew by 25%, and EREVs grew by 4%. I don't know exactly what EREVs stand for right now. All right, so let's take a look at weekly registration. This is weekly, not monthly registrations in China, and this is for last week. BYD's weekly insurance registrations in China for new cars was roughly 59,000, okay? The company sold 380,089 new energy vehicles. New energy vehicle includes both battery electric vehicles and hybrids in April. That's up 21.34% year over year and up 0.71% from March. This is just BYD. Now, I initially didn't believe this 380,000 number. I did confirm it from other searches, other sources. BYD had a blowout sales month in April with more EVs sold than hybrids, and that's not all. So let's dig into what that actually means, more EVs sold than hybrids. So if they sold 372,615 passenger vehicles and another 7,474 commercial vehicles, they actually sold 195,740 fully electric cars sold in April. That's a huge number. They're doing very, very well. That's not the only problem that Tesla has, and let's take a look at why. China's EV insurance registrations for the week ending in May 4th, NIO registered 3,400, Tesla 7,200, and BYD 59,310. Over half of those are fully electric vehicles. NIO had 5,100 insurance registrations in the last week. If you include the 3,400 under the NIO brand, 1,200 under their luxury brand Envo, and 350 for their new Firefly brand. And this is actually the first time that Firefly has been reported. Vehicle sales were negatively impacted by the May 1st to May 5th Labor Day holiday in China. All right. So NIO, Onvo, Xpeng also reporting 5,500 registrations. Look at Tesla, 7,200 registrations. Li Auto reporting 11,400 registrations this week. They do now have a fully electric model that's out there, but they mostly do hybrids, and their hybrid is a little bit different too. So we're looking at a lot of competition. Also looking at Xiaomi EV registration. This is a brand new company that basically has two products. They're on track to do close to 300,000 units sold this year. NIO is on track to do close to 500,000 units this year, and Xpeng close to 600,000 units. Little by little, also companies that you don't really know about, Zeekr, they're looking to go ahead and start eating away at that market share as well. Leap Motor and Ito, and is Geely on here? Geely is not on here. So there are a couple of other things we can look at here. We look at the overall rankings in China. The Tesla Model Y is still the number one selling model out there. And we look at the this lighter color here represents internal combustion engine vehicles here. You don't see an ICE engine vehicle in the top 10 until you get down to number 9 and number 10. So battery electric vehicles are simply taking over, and hybrid electric vehicles are taking over the market in China in a way that's not happening here. Battery electric vehicles represent about 8% of market share in the overall United States, maybe 13 or 14% in California. I expect those numbers in California to decline as more and more people turn away from Tesla and look at alternatives. Maybe they're not buying battery electric vehicle at all. Maybe they're buying a hybrid. Maybe they're buying a competitor that's available. So here's the real story in all of this data. The BYD Song, the Wuling Mini EV, the BYD Seagull, the Geely Xingyuan, the Xiaomi SU7, BYD Kin Plus, none of these cars are sold in America. All of these cars compete exceptionally well on a quality versus price metric versus any US model in the same class. Essentially, the Chinese consumer has a lot more choice than we do in the United States when it comes to car models. The imports to the United States are pretty carefully curated by regulation here, as well as tariffs. Now, if the United States is going to get rid of a lot of auto regulations and allow more freedom in production, more types of vehicles on the road, that would open up U.S. markets to Chinese vehicles, even if there are tariffs. So the BYD Seagull is about to be starting to be exported to Europe at this point. It's going to be under $18,000, and that is with a 17.5% tariff on that vehicle. And a couple of other companies in China have tariffs as high as 35% in the EU. The bottom line is Tesla is not just being outcompeted in terms of volume sold. They're being outcompeted in terms of technology, in terms of styling, comfort, and the fact that the Chinese market just offers the consumer more choice. I know it's kind of hard to hear. We're raised in America and a capitalist society. The United States makes up 25% of the global economy. We tend to think of ourselves as the best in terms of capitalism. The auto industry in the United States is not delivering to its consumer base like the Chinese auto industry is at this point. China has done a really smart job in supporting their companies with policies and incentives. The United States has done a worse job of supporting this changeover in terms of policies and incentives. And we're starting to see ourselves getting beat at a capitalist game in global markets by the Chinese Communist Party, which kind of drives me crazy. They are right now performing better capitalism than we are. And this really worries me when it comes to the future of our auto companies. They may not be competitive in global markets because of quality issues, and because we're not designing products that are right for the market they're going to be sold in. Chinese vehicles will sell very well in Europe because their requirements for their vehicles are not the same, but they're similar enough that it doesn't require major retooling of factories to get things done. Nobody in Europe really is going to buy a Cybertruck because it's not a useful vehicle there. It's just too large. It doesn't fit in parking spaces. It doesn't fit down narrow roads. But Chinese vehicles are going to sell pretty well there. And I live closer to the border here in the United States, so I actually see BYD vehicles pretty frequently crossing the border here into the United States, seeing a lot of hybrid BYD trucks. I saw my first BYD Shark the other day, and I don't know what kind of BYD battery electric sedan that I saw the other day, but I saw 3 of the same model on the same day, and it's happening more and more frequently. When I say I live close to the border, I live like 8 miles away from the border. And in San Diego, there are thousands of people that cross the border every day. They live in Tijuana and they work in the United States. They're usually American citizens that do this, but they're buying BYD vehicles in Mexico where the tariff is relatively low, and they're competing really well against our offerings down there. I look at our companies here in the U.S., and they are protected by policy here, and they're protected by tariffs here, which means that they are not competitive in global markets, and it's not all about labor. These products are really good. It's not all about cheap labor. These products are really, really good, and they're being denied to us to protect the billionaire class here in the United States, and of course to protect jobs as well. I don't think overregulation and tariffing is the answer. I think that our companies need to be more innovative, and this is something that I've talked about over and over and over. Tesla 8 years ago was a technology leader, and they kind of sat on that technology lead without really driving forward with those vehicles, and now they're kind of paying the price. BYD has 100,000 people in their company dedicated just to R&D. Tesla doesn't have anywhere near that amount. This Wuling Mini EV, it just popped back up. It's 149% up month over month, and I'm sorry, year over year. That's because they did a refresh on it. It's now a 5-door model with a bunch of features. It's a very basic EV, has like a 150-mile range. It's just made as like a city driver. This thing by next month, I would not be surprised if instead of selling 40,000 units, they sell 80,000 units. It's going to be a very, very popular vehicle as a city driver inside of China. This is going to introduce more and more people to driving an EV. Later, when they want to replace that car, they're going to step up. How are they going to step up in terms of value? Is it going to be BYD? Is it going to be a Tesla? Is it going to be one of the other American manufacturers that are making EVs? I don't know. I think that the cutthroat Chinese market is going to be very difficult for Tesla or any other leader in the United States to actually grab a significant portion of that market. BYD right now sells 27 or 28% of all vehicles that are being sold in China. And I don't think that analysts really understand how important this is. I've been following the Chinese car market since roughly 1999. And since then, as far as I can remember, no Chinese automaker and no automaker period worldwide ever cracked the 15% barrier in terms of market share until BYD came along. This is the first time we've seen a dominant car maker inside of China. In the past, VW was a leader in production many, many times. The dark horse to look out for is Geely, this company on the bottom, and right here at number 5. They are starting to ramp up production. Xiaomi is the other company you want to look up for. They're really starting to ramp up production as well. And let's remember, Xiaomi just burst onto the scene last year, and they're really starting to take off. So anyway, guys, just a quick video to talk about the state of the Chinese EV market here. If you like seeing this and you want to see more, please like and subscribe. Check out my Patreon, and I will see you folks next time.